Hello and welcome to this report analysis from the USDA, January 10th USDA report that was released at 10 o'clock Mountain Time. I'm Ken Plose from Farm Business Consulting, and I'll be guiding you through what changed in the report. So first off, just starting on the web page, you'll find the report down in the report section after you log in through the client login. You can view it at your own leisure. Going forward, I'm just going to talk about the numbers. So there's a lot of writing that comes out with the report, so you can view it. A lot of it I will be covering. But why I call this the Super Bowl of all USDA reports is we have basically a number of reports all rolled into one. We have the U.S. crop production, their final crop production numbers from the 2013 year. The initial look at winter wheat acres that were planted last fall in the United States. We have the quarterly stocks in the United States, U.S. ending stocks. We have the world ending stocks, world production, and that's it. But that's a lot in one report and a lot for the market to digest. So getting into the numbers, I'll just erase everything here so we can start afresh. What we see with the initial numbers coming out with the U.S. crop production, we'll start right at the top and work our way down, is we saw that the corn number for their production was actually dropped. The trade was thinking of a high end 14.2, 13.8 on the low end is what they were looking at. And of course, the number came in very much in sync with the low-end range. This being compared to the last few years with the drought in the States of 10.7 last year production. So still a substantial raise, just about a 40% raise over year to year. But nonetheless, the trade was looking for an average of 14.05, and corn came in relatively lower than that. So a little bit of change. Once we get to the futures, you'll see that corn is trading up. It was as high as 20 cents, but it's down around 15 cents higher. So soybeans, a real surprise here with soybeans is the USDA upped the number of acres harvested. So they only changed the yield production from soybeans to 43.3 instead of 43 from their December report, what they were working on. And what they did do is they added another 500,000 acres of soybeans that were harvested. So how they found an extra 500,000 acres that were seeded and harvested, anybody's guess. But again, it's a USDA report, so there's always surprises. The trade was thinking on an average 3.27, so 3.28. Higher than 3.27, but not at the high estimates and not at the low. So we see beans trading relatively flat this morning and expect it going forward into next week as well. The winter wheat acres in the States dropped significantly. If we look at their production, what they seeded last year was 43.09, 41.89 is what was planted. The only key point, we have the hard red and soft red and white wheat. But the key point for, I think, what the trade will be looking at going forward here in the next month or so is the drop in what they thought soft red was going to produce or going to be planted. This will definitely drop their production, and this, of course, is Chicago wheat. So the Chicago wheat futures are based off of the soft red number, and definitely way off of what they thought on the high end. So, and the year to year, we see it down as well too. So definitely going forward, Chicago wheat should have a little bit of support just coming from that number. And of course, if we're a million less than what they thought was going to be seeded, we could be looking at where did that million acres go once the March report starts to come out onto U.S. seeded acres. Quarterly stocks. So now this is where we get into quite the numbers. And what we have to look at is basically the last time these were reported was the year end. So that was the carry-in and corn. And what we have coming off of December of 13 is a substantial amount of quarterly stocks. Again, the trade was thinking on the low end, 10.32, and corn came in near the low end. Beans came in pretty much right in line with the average. So there isn't anything necessarily that. Another real interesting line with, or interesting thought with wheat is we had wheat come in at 1.46. If you look at the highs and lows of what the trade thought, they really didn't know where wheat was going to come in this report. And, we came in a little bit higher than what the average trade guess was for wheat. But nonetheless, they have had a pretty good export pace with their wheat as they produced more than they did year over year as well, too. So if we look at where it was last year at this same time, it's definitely lower. Let me just clean a little bit of this up. 1.67, but really the price is lower as well too. So we'll get into that once we get into the world-ending stocks and why wheat is so bearish and why it will be bearish going forward. So the U.S. ending stocks, again, I have it highlighted as to corn and why. Let me just get that up here. The corn number came in. Of course, we can barely, you can't really compare it to last year because of the drought year. But of course, it was definitely higher than last year, which it should have been because they produce a lot more corn in the States. But the number to look at is where the ending stock projection was in December. They had the trade pretty much had it at 1.79, and you see where we came in at. We're at 1.631. So again, the trade was looking at having a number come in right around the 1.8 for this report, but the strong export pace definitely blew what the trade was anticipating away. So we see the corn coming in at that 1.6. Average trade guess 1.84. That's why we see corn up, and we'll probably see corn up early in next week's trade as well. When we turn our attention to soybeans, soybeans came in pretty much right in line with the average trade guess for their ending stocks. Nothing much has changed there, even though they found another 500,000 acres that produced soybeans. This is just offsetting, what they found is just offsetting the torrid pace of their export. Now wheat, a little bit of a disappointment as wheat came in definitely higher than what they were anticipating for an ending stocks number back in December. So wheat we see down about 8 cents, 8 to 10 cents again, and the trade has been anticipating this. But another key point, if we look at wheat, it's still lower ending stocks than than what was out there last year. So definitely the United States produce more wheat, but they are using more as, again, like we're finding in Canada. If you sell it cheap enough, the world will buy it. Now, once we get into the world ending stocks, this is where the numbers get rather interesting. We see corn come in, world ending stocks. December, it was projected corn would be at 1.62 million metric tons. Now with the USDA adjusting their numbers, it looks like the corn number will come in at 160.23. So a big drop. If you look at what the low trade thought, they actually thought it was going to go up from the December report. But definitely they're anticipating, average trade guess was anticipating 2 million metric ton more, yet it was decreased 2 million metric tons. So a loss of 4 million metric ton if you were to take what their average guess was before the report. So again, corn, likely see it selling up in increments. It'll be choppy as well, but trading at 430 today, coming off of a 409 low in overnight trade. And potentially look at going to about the 470 range chart-wise just on technical selling. Now, transversely on soybeans, we had some pretty ugly numbers come out. 72.33 million metric ton December. They were projecting 70.62. So just as corn went down for their ending stocks thought in the world, soybeans went up. A million metric ton came from here, yet there's a million metric ton that isn't really accounted for, and the trade pretty much is figuring on this being 90 million metric ton or higher coming out of Brazil. So again, soybeans needed to go up and will go up, but if you look at year over year, 12 million metric ton more for this time of year for what will be carried out compared to what was carried out in the 2013 or 12-13 year. So again, that's a huge increase, right up around 20% increase in corn ending stocks. But the world was coming off of 2 droughts in the United States and 1 drought in South America as well. So stocks did need to go up. When we look at wheat, again, when I said earlier that wheat necessarily shouldn't be bullish in the United States front, but is bearish on the world front. We see December, the world stocks were basically pegged at by the USDA of 182 million metric ton ending stocks. Again, this is projected for August of 2014 now is when they were projecting this number. But we see that it rise to 185, and again, Canada's number and increase was already worked into this 182. So now the world is using a little bit less wheat, and the USDA is projecting that the ending stocks in wheat is going to go up to 195. In the year 2009, this number was 190 million metric tons. So we're still lower than those 2009. Than that 2009 crop year, but definitely working our way up there. And like I've always said, the easiest thing for the world to produce is wheat, and always will be. And going forward, there is no real need to be bullish and not even really neutral when it comes to wheat. And definitely going to have to revise some seeding plans as to what wheat goes in the ground as well too. So last thing on the report was the world production. And what we're looking at with the world production, again, worried about South America, Brazil, Argentina, and what they're going to produce. December, 88 and 54.5. USDA revised this to 89. Again, I said the trade is banking on 90 million metric ton plus coming out of Brazil. That's already worked into the market. This number in Argentina, though, looks like it could be a little bit lower with the heat stressor under, so around 53.5. So these two may just offset each other in future reports. But again, looking year to year, in January of last year, 82 for, let me just clean this up a bit, 82 for Brazil, 89 now, 49 for Argentina, and 54 now. So basically, if we were to total these two up, we're looking at 131 roughly million metric ton, and now we're looking at 143. So it's a gain year to year of plus 12 million metric ton in soybeans. So again, that's why we see this number for world stocks going up, that even though the U.S. is using a lot of soybeans, the world is still producing more than what China is buying. So like I said, everything else can be viewed if you want to read the report. And like I always say, if you want to fall asleep, that would be a good idea to read the report and go directly to bed. But these reports can get a little bit boring. One thing I do want to point out. So one last thing I want to point out is the world supply demand and where we come in with supply demand after this report, because this will really set the tone going forward as to what the trade feels is going to be relevant Starting off with corn, we see that the corn stocks to use ratio, so this is basically what will be left at the end of the year, but the stocks to use ratio is what most trade uses in order to determine whether a commodity is bullish, bearish, or neutral. So we see corn dropping ever so slightly, coming down from the December report, but still definitely higher than last year, and which is to be expected because there was no drought in the United States this year. Soybeans, we see soybeans going up from what December report said. Again, stocks to use is very crucial, as is basically $14.50 in the States for an average price, and $12.50 looks like it'll be their average price this year. Again, year over year, no drought in the States, so and we see the South America crop having a normal year as well, so we're going to see the stocks to use go up. And why I brought this slide up is wheat. As we saw wheat basically in December, they were saying we're going to have about the same amount of stocks to use. Now wheat, because they found more in the world and less demand for it, wheat is going up to 26. And the real crucial part for this is once it hits 28, which it was in 2009, 10 year, you know, the countries that buy wheat from us and from the United States and from all wheat exporters basically just sit on their hands and wait for the market to come to them. They can name their price because 28% stocks to use is a huge number. Again, we're at 26.4 after this report has been released. So, you know, going forward, it's going to be interesting to see the challenges that the wheat market faces unless we can come out of, I hate to say it, another drought or very big heat situation in the United States, or sorry, in Russia, going forward in June, July. Not much life in the wheat market. So, and then this is the U.S. We see that even though, as I've been showing you on the website, that this export pace is very rich, and year to year has been using quite a bit more wheat out of the United States. We see that they're going to be actually lower than last year for their ending stocks, but it's still what the world is at. So even though the U.S. is going to have less ending stocks than they did a year ago, the world is going to have more, and Canada is going to, if this chart was reflective of Canada, we'd see the bar likely up here, just simply because we can't get enough through our rail system to the coast to meet the demand that is out there. So the world still has demand for wheat. It's just the problem of the price and getting it to them before other markets can get it to them. So this is, I guess, the mid version of the report. If there's any questions, give me a call. I just want to point out, like I said, going forward, where the market is trading right now. And we see canola's up $1 a ton, beans are $4, corn 19 cents. So it's been bouncing around from a high of 20 cents up to basically, well, before the report was released, it was actually down 6 cents. So you know, it's not going to be a limit up day in any commodity. There's only about 15 minutes left in trading, but it's something that should carry through into Monday, Tuesday, and will definitely set pretty much the goalposts of marketing for over the next couple of months. So talk to you in the future.